Hello and welcome to Explain the Charts, your go-to channel for data-driven market analysis. Today is September 29th, 2025, and we're taking a deep dive into Amazon, ticker symbol Amazon. The stock has been under significant pressure lately, and we're going to unpack the news and then hit the charts to see what the technicals are telling us. First, let's address the elephant in the room. The news cycle for Amazon has been brutal. The company recently agreed to a $2.5 billion settlement with the FTC over its Prime membership sign-up and cancellation practices. While this is a drop in the bucket for a company of Amazon's size, it highlights the increasing regulatory scrutiny it faces on multiple fronts. There are also ongoing legal battles, including an FTC trial alleging the use of dark patterns and a lawsuit Amazon filed against New York State over a new labor law. These legal headwinds create uncertainty, which the market dislikes. Compounding these issues are investor concerns about Amazon Web Services, or AWS. While still a behemoth, its second quarter growth of 17.5% significantly lagged behind competitors like Microsoft's Azure at 39% and Google's Cloud at 32%. This has led to Amazon becoming the worst-performing Magnificent Seven stock year-to-date, essentially trading flat for 2025. However, it's not all bad news. Analyst consensus remains a strong buy, with average price targets well above the current price, some reaching as high as $300 to $350. The company is also making massive strategic investments, including a planned €7.8 billion investment in European cloud infrastructure and expanding its fulfillment network to work with merchants on platforms like Shopify and SGN. And let's not forget, Amazon's Prime Big Deal Days are just around the corner on October 7th and 8th, which could provide a significant boost to their fourth quarter outlook. So we have a classic battleground scenario, significant short-term headwinds versus long-term growth potential. Now, let's see how this narrative is playing out on the price chart. Looking at the full daily chart, we can see the broader story of 2025. The stock peaked back in early February around the $242 level, which now stands as major long-term resistance. We saw a dramatic drop in early April, finding a bottom around the $161 mark before staging a significant recovery. However, the stock gapped down hard after its late July earnings report, falling from around $234 to open near $217. That gap has acted as a ceiling, with the price failing to reclaim the $230 to $235 resistance zone. Since early September, the stock has been in a clear and aggressive downtrend. Let's zoom in on this recent price action for a closer look. Here we can see the sell-off in September, which accelerated in the last week of trading. This drop from around $234 down to below $220 coincides directly with the news of the FTC settlement, confirming the market's negative reaction. The price has sliced through several support levels and is now hovering just above the recent low of $218. This $218 level is the first critical support to watch. Below that, our next major support comes in at the low from the August post-earnings drop, right around $211 to $212. Now let's switch to the 1-hour chart to analyze this recent downtrend in more detail. On this time frame, the series of lower highs and lower lows is unmistakable. Every rally attempt has been sold off, creating a clear downward channel. The price broke below the key psychological level of $220 last week, and you can see it's now struggling to get back above it. That $220 mark has flipped from being support to now acting as immediate short-term resistance. We're seeing a bit of consolidation in the last few sessions between $218 and $220. This tightening range suggests a bigger move is coming. Bulls need to see a decisive break and hold above $220 on high volume to signal a potential short-term reversal. Bears, on the other hand, will be watching for a breakdown below the $218 support. For a closer look at the most recent price action, let's drill down to the 15-minute chart for the last couple of trading days. Here we can see the battle around the $220 level very clearly. The price saw a sharp decline on September 25th, falling from $220 all the way down to the $216s before finding its footing. On the 26th, the price chopped around, managing to climb back and close the week near $219.78. This shows some buyers stepping in to defend these lower levels, but the bounces have been weak and lacked strong follow-through. For day traders, the key levels are very clear. Immediate resistance is the intraday high around $221. A break above that could trigger a small rally towards $222 or $223. Support is the recent low around $218. A break below that level could see a quick flush down towards the next support zones we identified on the daily chart. Okay, let's pull back to the daily chart to put it all together and talk about what to look for next. To recap, the situation is tense. The long-term fundamental story has some question marks around AWS growth and regulatory pressure, but also strong points with strategic investments and upcoming sales events. The technical picture is currently bearish in the short term, but approaching some major support levels. Here are the key price levels to burn into your memory. Immediate resistance is at $220. Above that, we have resistance at the $228 to $230 area. The most significant overhead resistance is the top of that earnings gap, from $234 to $235. On the support side, the first critical level is the recent low of $218. If that breaks, look for a test of the August low around $211. A failure to hold there opens the door for a much larger drop, with potential support targets at $205 and then the major consolidation area from this spring, down around $180 to $185. So, what are the likely scenarios? Let's outline a bullish and bearish case. For the bullish case to play out, we need to see the price reclaim and hold above $220. This would suggest the recent sell-off was overdone and buyers are regaining control. Positive news from the upcoming prime big deal days could be the catalyst for such a move. I'd place the probability of a bounce from this area at around 50%, as long as the $218 support holds firm. For the bearish case, a rejection at $220 followed by a breakdown below $218 would confirm that the downtrend is still in full force. Further negative news on the regulatory front or a broader market sell-off due to macro concerns like tariffs could reinforce this move. This scenario, targeting $211 or lower, also has about a 50% probability given the current momentum and negative sentiment. Ultimately, the market is in a wait-and-see mode. The key things to watch for are the upcoming Prime Days results, any further developments in the FTC cases, and, of course, whether bulls can defend the critical $218 support level. That's our analysis of Amazon for today. Thank you for watching Explain the Charts. If you found this video helpful, please hit the like button, subscribe to the channel, and let us know your thoughts on Amazon in the comments. Remember, this is for educational purposes and is not financial advice.